Market did what we wanted it to do on Monday, right? Week close on Friday, week overnight session. Buy the dippers come in, and we get all the way back to Friday's high. Was that a gift? Was that just another gift rally with overhead supply saying, hey, I'm selling on strength and not weakness? Continued strength, and you know what? Hardware, Micron, SanDisk, oil, USO over 120, and Delta trying to give you some good news. We got to figure out that conflicting report. 8:35. Joe Saluzzi, Themis Trading comes on. We're going to talk market structure. Yeah, folks, market structure is important. We've got an offering to discuss. Nibius. It's all here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Down 12 handles. Nothing, not much. 73, 43, 75. Question is can we go green on the session? Get above that close. The buck had a big bar yesterday, but finding support at 99.50. TLT flat near the low of the move. USO. This is not what we want to see, folks. Up 633 or 443 at the last print. 119.46. GLD flat. Silver in the red, SLV down 69 cents, and Bitcoin futures are down $185, 74,305. These charts are brought to you by Trade Station Securities. Trade smarter, move faster, stay in control with the platform built for serious traders and investors. Let's bring on our Irish host.
I should have worn my green today. Neither of us wearing any green. We are party poopers here. And I actually didn't even think about it until you just said Irish host. I have a little bit of Irish in me. I have a little bit of Russian, a little bit of Irish, a little bit of French, a little bit of everything in me if you go back far enough. Hungarian. I'm Hungarian as well. So a little bit of everything. So we've all got a little bit of everything if we go back far enough. So,
do you remember in school what would happen if you didn't wear green? Back at least in my school?
Yeah, they'd whip you.
Well, not
That's what
whip.
they did back in Joel's day. They got the little what do they call the strap? There was a name for the strap, wasn't there? You would have got it a few times because you were bad.
Well, they used in my school. They could pinch you.
Oh, they just pinched you. They didn't actually strap you. Nice little leather strap, and
were you thinking of like the switch?
Yeah, that's it. The switch. It was the switch. Brentster with the save. Used AI. Did you ever get switched, Brentster?
I hope no. I don't think so. Maybe that's a good kid. Maybe that's why I turned out the way I did. Maybe I should have gotten
more switches.
You got a little green in that sweater?
No.
We are really all pretty.
Kind of like some right here, but you get Joel. Do you have any Irish?
Any Irish blood?
Yeah.
No.
None. Not even a little bit.
Sorry for that.
No, I don't. Not that I know of. I mean, who knows going back down the lineage? But let's talk stuff.
Green. I went on the tangent. So if they didn't wear green in school, what did they do to you?
They pinched you. Like pinched your butt.
Pinches.
I hate getting pinched.
We pinch.
Yeah. So how about this market? How about this?
Resilient. That is what we will call it. The most resilient market ever. Here we have oil, and the perfect inverse correlation still exists, but maybe not now, because this is the first day where we've seen USO ripping higher, and the S&P is like, so what? So what? Trumpster says we got double the oil that we need over here in the US. We don't care. Boom. S&P's relatively flat. That, my friends, is very impressive with USO ripping higher here. So are we getting to that point? I can ask the Brentster this too.
Yeah.
Where starting to become a little bit numb to oil prices? Are we getting to that point? I mean, if oil rips up 7, 8, 10%, we're not going to be numb. But we're handling this 3.5% move up in the USO pretty well here this morning.
I think there is some separation happening in this theme. And I think there's, some separation happening in a lot of places. The theme for the show today, the Battleground, this isn't necessarily talking about the conflict in the Middle East or other places in the world. We're talking about the market battling so many things right now. And yes, we, had some pressure, but for the most part, the market is pretty darn resilient.
Unbelievably resilient. I will go as far to say, like, I am very impressed with this overall market. This market has been able to hold up as well as it has. I mean, we have battled, obviously before the war, we were talking about AI, replacing white-collar jobs. We get the Meta headline over the weekend, markets rally anyways. We get, no real escalation, but no de-escalation either. Oil prices up today, but holding on. Pretty impressive. I mean, gas prices, Lord, we see them. I see them at the pumps here too. They're a lot higher than they were. But, this market, very resilient. What does this mean? Does this mean like we start climbing this wall of worry here once again? Or do we actually, this is just another selling opportunity? I mean, which probably brings us to Nvidia, because this was the driver yesterday morning.
Pull up the Nvidia chart here, Joel. We want to.
Yeah, I will. His comments were more in the afternoon, right? When we got that big spike.
Yes. Good clarification. Right before
bring it
the
up.
close.
Brentster, tell us about what exactly Jensen Huang said, and also, the misinterpretation at first.
So reviewing real quick review here. NVIDIA's GTC 2026 conference is happening this week. It started yesterday, kicked off with a Jensen Huang keynote that ran from 2 to 4 p.m. That's why you will see that major price action around 3 p.m. in NVIDIA and in the market. So Jensen has given his presentation. Everything's la-di-da. We're having fun listening along with them. And he says, as far as I've seen, he said, the company will have 2027 revenue of $1 trillion. Market goes nuts, as it should.
Because estimates were at 468 billion. So they were like, oh my gosh, they're doubling their revenue estimates for 2027, and Nvidia just rips. Sorry to interrupt. I just want to get
that was good. So okay, so la da 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 da. Market spike. Nvidia spikes $5, maybe even $6 on that comment. We are kind of selling off right away. The market is showing some skepticism right away. Jensen Huang comes out with a clarification during the presentation a few minutes later, saying that was for the period from 2025 to 2027. That's a 3-year period, mind you. NVIDIA just reported their Q4 2026 period. So the next quarter that NVIDIA reports at the end of May is going to be for Q1 2027, just to give you a little juxtaposition of where the quarters are in the years here. Now, even later, we're hearing that this was not a comment about revenue. This was a comment about orders, which as far as I know, NVIDIA doesn't give like a hard orders number in their earnings reports. I went back and looked at a couple of the last NVIDIA earnings reports. I couldn't find any mention of the word like orders. So just, a little summary here. I guess I'm just a little confused why Jensen wanted to use that phrase orders when it seems like they don't traditionally use that commentary.
Yeah, so lots to chew on here. I mean, if you're talking about orders, it's a different thing altogether. If you're talking about revenues, so somebody did the math on Twitter. I'm not sure if the math is correct, but I was reading it, and they said that actually would look to guidance of about 500 billion for 2027 revenue numbers, and they are at 468. So it was still a guidance raise if they're actually talking about that. They're talking about orders, and we can't compare apples.
We don't have a comparison here,
so it gets confusing as well. So with that whole comment was just confusing to the overall market. Originally, the algos bought like crazy because they thought, oh my goodness, talking, basically doubling revenue for 2027. And they realized it's not the case. There may have been a guidance raise of 7%, which actually isn't as much as sometimes Nvidia guides up. So then you don't know if it's orders or whatever. So it was very confusing in the overall market. With that being said, Nvidia, sold off obviously after it, but kind of bounced back and has settled in. Back to the battleground. I mean, this is going to be the theme throughout the show. If you look at this Nvidia chart for the last 6 months, not even the last 6 weeks, we've basically gone nowhere. We were at this price in July of last year. So not even 6 months. We're talking about almost 9-month period here right now. Just sideways consolidation action. Look at that chart on the right. Just choppy.
There's the weekly.
Yeah. And I mean, maybe it's valuation, PE contraction, because obviously, Nvidia is trading up at 40 times earnings at one point in time. We're talking about it like 18, 17 times forward earnings here at this point in time. So it's, it's definitely coming in the higher multiple, but it's now a low multiple. So lots to think about here.
Yeah.
But it's been sideways here for a very long time. So there's definitely a battleground in itself in Nvidia that hasn't just started in the last few weeks because of the war. This battleground has been, raging on here for now 9 months. So who wins? Bulls or the Bears? Do we eventually just blast out of here? I'm with the Bulls. I'm still long Nvidia, big position in my long-term portfolio, looking to even add to it because I feel like at 17 times earnings, I feel like AI is not going away. I mean, the one, if we just wanted to talk quickly just on AI overall, the risk thesis to AI, because there's so many people obviously who are, like AI bulls, AI. The risk thesis for AI not growing as quickly as everybody anticipates is government regulation. That is the risk thesis here, that we actually do see AI start to cost jobs in the second half. Anthropic CEO was saying 30% of, yesterday, 30% of entry-level jobs going to be gone in the next 2 years. So there's a lot of like white-collar jobs at stake here. If we actually see that start occurring, where we start seeing, not just Meta laying off 20% of the workforce, not just XYZ, but companies across the board start laying off, the Trumpster is going to be pissed off about that. There is no doubt. So in the second half of this, there is the possibility that he's like, wait a second here. He's already mad at Anthropic anyways. I mean, that he's going to, start coming at it hard, saying, we're not just going to let AI take all our jobs. That's the thesis. That's the risk thesis for being really uber bullish AI stocks. If you think government regulation isn't going to, interfere, then you're buying all these stocks left and right. There is going to be some interference here, though. The uptake's going to be slower than a lot of people think. These are the risk factors. I am still long Nvidia. I'm still long AMD. I'm still buying hardware and energy names. I bought another energy name yesterday, Vistra Energy, VST, because I think overall it's going to be hard to regulate because, one, we don't have a world government here. So it's like, oh yeah, US starts regulating AI while China is letting it run wild over here. So I mean, now you're falling behind in the AI arms race. So regulation is in itself is even hard to do because governments aren't going to all get together to regulate it. So there's so many, moving, parts here. But overall, I still think AI wins in the end here, even with government regulation. And that's why I would still bet on a stock like Nvidia.
And there's still more to talk about with Nvidia this from yesterday and the GTC conference. But Joel, I want to get your thoughts on what this move in Nvidia shares yesterday, almost immediately after the Jensen Huang $1 trillion comment, what you think it means for the state of the market, for the sentiment of investors and traders out there right now.
It just, to me, is that they sold the rip. I mean, it was an unexpected rip. It got over $188. And then it pulled in. I mean, it got all the way to like what was that high? 188 and change, 188.88. And then it immediately, within the next half hour, gave back $6. So just to me, it's like they sold the rip. And I mean, usually when these, when he talked to CES at the beginning of January, it top tipped the market too, and a lot of different things. So it kind of felt like that moment. But then again, it came back, and now it's having its orderly rally back. Dennis, I went back on the weeklies all the way to August. And basically you can even tighten it up. My parameters are here at 170 and 195. But if you even want to tighten up the parameters on that a little bit, and you look at let's just say you bring it down to one. I mean, how much time have we traded between 180 and 190?
So much. It's been a contrarian dream is really what it has. And this market overall, which could segue us, we want to keep talking Nvidia here, but I just want to take it to the SPY here for a second here too. Because it's not just Nvidia that's in a battleground here. I mean, let's do it with the SPY. The SPY is in the same spot that it was back in October of last year. So now you're talking almost a 6-month sideways period for SPY as well. So, yeah, we're towards the lower end of the range, actually, which is somewhat concerning. But overall, we've really gone nowhere as well. Qs, same story. Qs are in the same spot they were 6 months ago. I like this. Glasses and happy faces. And if you did it in green, it would have been perfect for St. Patrick's Day. But maybe change your color to green. We're going to do that in a second here. But this is just the market that we're in. It's sideways for the win right now. So do we just break out? Does AI efficiencies break us out and take us, to higher places? Maybe, but maybe not as well. So there's a lot of things to think about. This market's juggling a lot of balls. I mean, you can even go into the bond market and say, oh yeah, it's been just terrible to be a bond investor. It has for sure. But really, when you look at the TLT, we're in the same place we were a year and a half ago. Now, remember with the TLT though, you are getting paid to wait. You're getting paid quite a bit more than SPY. SPY 1% dividend, TLT 4.4%. So obviously you're getting more money to wait. So if TLT stays sideways for the win, you pick up 3.5%. If everything stays sideways, you pick up 3.5% more on the TLT. So I mean, we're just the same thing. We've just been sideways consolidation in this market for quite a period across all asset classes, really, to a certain extent here. Gold's been rallying here in the last little bit, but it's slowed down and obviously has come off those highs. Like, this is battleground, folks. This is like, place your bets. Are we going higher or lower? Because we're in consolidation station on a lot of things when we really back the charts out farther than just looking at like a 30-day chart. You start looking out 5, 6, 7 months, we're battleground.
Yeah, just real quickly, I wanted to throw in the overhead. You just kind of felt like some overhead supply in there. You got the pop, and people were like more than willing to, to sell it. Ooh, look at that triangle here in the GLD consolidating. Don't break out of the bottom of that triangle there, working into the wedge. And then also, just one final note, Nvidia. Look at the convergence here now with the 50 and the 200 day.
That's just really getting tight.
Look at how close it is. It's like it's like the fight. Sell option, sell premium. Not investment advice, but it's gonna move. It's gonna break out. We thought we had to break out over earnings. They slammed it down. They couldn't. Everyone wanted to buy it at 170. It couldn't get back to 170. Just amazing consolidation here, and let's hope for market's sake it consolidates, breaks out to the upside.
So Nvidia had other stocks moving here, Brentster, and I want to go back to the conference call at 4:30.
Yes,
we had the most press releases. Obviously, we cover this in Stock Trader Network Trading Room think tank. We have so many press releases coming up 4:30. I had to stop trading and breaking press releases with you. I don't know if you had a chance to count them up, but there had to be like.
There was
40 press releases all related to Nvidia, all separate companies.
There was like 25 or 30 that were like actually tickerized, that were like pretty easy to detect. We're calling this press release madness, and we can highlight a couple movers here real quick. But something that I want to focus the discussion on is what we have on screen right now, which is how it seemed like the algos got overwhelmed by all this information flow. So why this happened is the GTC conference is a way for Nvidia to promote things that they're excited about as a company. They're going to be promoting things that they're excited about, they're working on, but they're also promoting stuff that they're working on with partners. And Nvidia is incentivized to reach out to these quote partners and say, hey, get our name out there, and you can say that you're working with Nvidia, you're partnering with Nvidia. And we know that companies time out these press release madness launches with the end of presentations. Like Apple does this every time they do a WWDC conference. Right at the end, they get out all these press releases. So we had 25 to 30 press releases saying basically, as far as I could detect, the summary of it, the gist of it, the fluffiness of it, a lot of these companies were just saying, hey, we're using NVIDIA chips to power these things that we're working on. Is there any real benefit for these companies using NVIDIA chips? Well, if you think that NVIDIA is like the premier chip and they're using the best chip, maybe, but do not, let's be clear here. A lot of these companies aren't partnering with NVIDIA in like a traditional sense. Uber was one of our first movers here on this press release. And Uber issued a press release that said they're going to basically be using NVIDIA chips to power their autonomous robo-taxi, self-driven, software-driven robo-taxis in 28 cities by 2028. We knew that Uber was going to be working with NVIDIA, but yet we see Uber shares moving higher here this morning.
Substantially higher.
Still a pop on it.
Yeah.
Another one I want to, and stop me if you guys want to comment, but
no,
another one I want
keep
to,
going. Just
another one I want to direct our attention to, a smaller name, a low float name is my preface, AI. It's ticker LIDR. Press release out at 4:45 p.m. It says AI is joining NVIDIA's Halos AI Systems Inspection Lab. That was, as far as I read, the gist of this news. There were other companies, other publicly traded companies that also mentioned this Halos AI Inspection Labs system. Like the other one was NOVT, Novanta, Lattice Semi, LSCC. Both of these companies announced pretty much the same press release AI did, and those stocks are not moving at all.
Yeah.
So why does anyone have a sense of why some of these stocks are moving and some of these stocks are not? Let's hear it.
Yeah. So you had probably about 30 press releases that all dropped to 4:30, and a couple came like it seemed like a little bit sooner. Like I think the Uber one was like
Uber was one of the first.
Yeah, one of the first.
Maybe
and then
first.
Lyft came out and they lifted too. Same thing, LYFT. And then it's like Eaton came out, it popped up. And then like can you just list off, Brent? Like just give us a list. You have it? Because there's just list off the tickers of how many, because I want to give perspective here.
Yeah.
There was about 35 companies that had press releases dropping pretty much all at the same time about how they're working with Nvidia. And in some cases, this is just like we're using Nvidia technology. It's not like a
most cases
real partnership.
Yeah.
This is like we're just like literally I could say, oh, I've got, I just bought a new PC. I've got an Nvidia chip in it. So I'm working now with Nvidia to do stock trading and stock analysis. That is kind of the same. So a lot of these press releases, what you would call is very fluffy, promotional, trying to get the stocks to pop up, which obviously they worked in some cases, but in other cases, I believe that the algos just got overwhelmed because there was so many. There's your list, Brentster.
Yeah.
CDNS, Uber, Adobe, HPE, SNPS, NVTS, NXPI, LSCC, PCOR, IBM, Frog. It just goes on and on. ITRI, IQV, CCIX, NTAP. Some of these pop because they were early and they got them out there before the other ones like Uber. But then the other ones at the end, when they were popping and there was some coming off at 4:45, those weren't moving at all because the algos were already onto it. And they're like, well, we can't buy every single tech stock in the whole world up here. Like IBM got zero pop whatsoever, hasn't moved at all. So, I mean, some of these stocks are trading higher because the S&Ps are trading higher this morning, but they didn't get 3-4% pops like Uber did. So, I mean, this was just, what it was. This was basically markets moving very quickly. Algos all over the first few, and then they were just like, well, there's too many, overwhelmed, and then they just stopped buying them all together. And, the human beings are sitting back there just watching with popcorn. So.
Yeah, and this is Dennis. This is like to make a likeness here. This is something that we talk about with Trump using his silver bullets. He has these things he might be able to say to help pop the market up, and this is kind of similar here. I think where it seems like the way you said it, the algo's getting overwhelmed. The algo's basically like they understood that these press releases were diluting the flow of information and maybe started ignoring them, or maybe never picked them up in the first place. I'm not
I
sure.
think they started ignoring them. I think there's human, because when you're running algorithmic trading systems, we're going to get Joe Saluzzi on here in a few minutes too, and Joe's excellent with high frequency trading. But when you're running them, and I've had run systems before as well. I mean, you monitor those systems. There's usually they're not just a free for all. Maybe eventually with AI, it's going to be a free for all. for the most part, you've got a human component, like you've got the systems running, but you also have human beings, monitoring the systems. So it takes a few minutes for the humans to say, hey, shut this off. We're not just buying every algo headline here right now because this is just too many and they're not going to move all these stocks. So the human aspect of it can think through that. AI will eventually be able to think in that same logical way.
Sure.
But high frequency trading is not AI centric here right now. It is still just programmable, orders. And they see Nvidia with a company like, like LIDR, and they automatically buy. So, they see a company originally with Uber, Nvidia, Uber, same headline. But there's programs out there that just automatically buy. So once you get through and you got like that list, which is so huge, the human monitoring that news algo, is probably like, okay, no,
steps in.
stop button, HFT stop, and that's it. So that's why you don't see the backside ones popping at all, because the algo would have been stopped from continuing to buy all those names. It was just too many.
I put up on screen right now the calendar that we've been using for like our whole week. We got earnings on here, we got econ, but direct your attention to the bottom there where we have a couple quick highlights for some of the presentations that we will see out of the Nvidia GTC conference today. A few I want to especially highlight. We're going to be getting at noon a Microsoft presentation. At 1 p.m., we're going to be getting the Uber presentation. I'm assuming that'll be largely related to the robotaxis thing that was announced last night. Oracle at 1 p.m., talking about cloud platforms. Dell at 2 p.m., quote, AI success stories. Walmart is even going to be doing a little presentation today at noon. GE Healthcare at noon. And also Vertiv VRT at 1 p.m. on scaling the AI factory. So a few highlights there. Real quick before we go to Joe, Dennis, do you have any expectation for like any excitement around some of these presentations?
I think a lot of the excitement is probably already been priced in. So many press releases that came yesterday. Obviously, Nvidia commentary here. Now a little bit of hangover. Jensen Huang's done speaking. The $1 trillion that they'd originally thought in revenue, not the case. So I think at this point in time, like, do I expect Microsoft to move substantially on its presentation today here around noon? I do not. Some of the smaller names always, have the potential to move because the floats are smaller and there's just less liquidity. And, somebody gets excited, they can really move. One institution comes in there, could really move price. But I don't think you're going to see the crazy moves that you were seeing yesterday on this. I think it's usually day one, which is all the excitement. By day 3 or 4, they're not even looking really at it anymore. So you might see who else presents today. Just tell us one more time here, Brentster.
Sure, no problem.
Michael was putting this list together in the background here.
Yeah.
Very well. We know Microsoft.
Yep. Microsoft, Uber, Oracle, Dell, Walmart, GE Healthcare, Vertiv. Before I didn't mention Disney, also Lucid a little bit later around 7 p.m.
Like, I mean, a small one like Lucid always has the potential to move as well. It's because the smaller float, but doesn't mean it has to either. So I think we're, now at a point where it's probably not going to be as exciting as it was at 2 o'clock yesterday when Jensen Huang is dropping $1 trillion numbers.
We're looking for to integrate some AI into pre-market prep and STN. Are we going to get a little mention here at the conference at all, or
if we got a few grand, we could probably get a mention.
Just go buy an Nvidia processor, and then we say we're working with Nvidia, and we're going, we're working with Nvidia. We're like an Nvidia company here now. Yeah,
pretty much. Yeah,
go out there. Yep. That's what a little bit of these press releases was all about. Fluffy to say the least. Okay. If Joe is ready in the background.
Joe is ready.
We never like keeping our guests waiting. So let's go run that intro here. Let's go talk Joe Saluzzi.
Okay.
Coming to the stage, Joe Saluzzi, partner and co-founder of Themis Trading, author of Broken Markets. Joe, how you doing today?
I'm doing great, guys. How are you? Good to see you. It's been a while.
Yeah, it has been. So you wrote a book, Broken Markets, a while ago, right? I know you had a little bit of triple D in there. And so if you wrote a book now, would it be like Broken Markets 2, or would it be Crumbling Markets, or What would be the new title? What are you working on?
It would be Still Broken Markets. So
Still
nothing's
broken market.
changed. I mean, it's funny because if you go back to that book, nothing has changed. Really, all the things that we identified back then, with how high frequency traders have their advantages, latency arbitrage, all the things that the exchanges do to give these guys an advantage, to sell them the advantages, they're all still there. Reg NMS which caused all this stuff that the SEC created in 2007, is still there. Although there's a lot actually now that they're trying to change about that. So we'll talk about later if you like. This new SEC is a much different SEC than the prior one. They like to say it's a new day here at the SEC. The chairman has said that a million times. I don't know if that's a good day or a bad day, to be honest with you. Some of the things that they're indicating, I don't like a lot. Other things are fine, but it is definitely, things are changing beneath the surface. So this takes a long time. In DC, the way things work takes a long time. But going back to your question, still broken markets.
One thing that is coming, and I'm going to go out of order. I know you had a few things you wanted to talk about here, Joe, but 24-hour trading. I mean, we see it on Robinhood. We see it on Interactive Brokers. The exchanges are sitting back here saying, man, there's some money to be made here. I mean, these markets are going 24 hours. It's going to happen. It's just a matter of when. What are your thoughts? What are the obstacles here? How do we do this?
Yeah, I agree with you. The industry is pushing this. There's no question it will be done. It's not going to be 24/7. It's going to be 23/5 is what they're going for, because they can't do 24 hours. They need an hour shutdown, and they can't do 7 days. So the problems that they have, the obstacles are clearing. They have to, the DTCC has to fix that up, and they are working on that. The big obstacle also is the SIP, which is the Security Information Processor. They need to publish these quotes. So, for instance, the 24/7 exchange, there's an exchange called 24/7. They were approved in December of 24. They're live right now. They're trading actively during the day, but they're not allowed to trade after 8 o'clock because the SIP shuts down at 8 o'clock. So they actually just petitioned the SEC for an exemption to get those quotes, so they can start trading. And I don't think they should, because you're an exchange. When you're an exchange, you have to publish quotes, period. As an exchange, you get benefits and you have responsibilities. So to your question, this thing it's a steamroller. It's on its way. But from my point of view, we speak to institutional clients only. We don't deal with retail. And there's been not one institutional client that we've spoken to who wants 24/7 or 23/5 trading. They don't feel the need for it. They believe that when you're trading in size, right? When you're trading in 100,000, 500,000 lots, whatever, you need liquidity. And there's not going to be real liquidity in the middle of the night. There might be, if you're trading at 3 times leveraged ETP, you could probably trade that for 500 shares. It'll be out there, but nothing real. And especially if you're trading small to mids, it's not going to be there. All you're going to do is get yourself in trouble, and you're going to have some, sharks on the other side in Asia looking to pick you off here and there. So we don't think there's a need for it on the institutional side. We don't think it'll be the industry believes it's a field of dreams. Build it and they will come. It's not going to be there. For instance, and I'll state my case by this way: the pre-market right now, which goes from 4 a.m. to 9:30, it only represents about 6% of average daily volume. So there's not much going on. So I don't understand the push for this, but the industry wants it. They want to make their money, and they're going to get it.
They don't want Robinhood to have it. I mean, this is Robinhood's getting extra volume here, and they're like, this is money that we could have here too. Let's take this back here. So,
but obviously, they have to go onto the exchanges, right? They have to go onto some dark. Right now, they're probably trading on Blue Ocean or one of these.
Yeah, it's all Blue Ocean, yes.
Yeah, so those guys that's the plumbing, right? What the book was all about was the plumbing of the market, the infrastructure, the engine that drives it. So that's what all these, the ATS is, the exchanges. These guys, they want a piece of the action. You're absolutely right.
Let's change the subject. I'm going to go off the board here. Quarterly reporting. SEC is proposing to go to semi-annual reporting here. This just was, being proposed yesterday. I know Trump had mentioned it a while back. It's not completely off the grid here, but you go from quarterly reporting to semi-annual reporting. Thoughts here, Joe? Is this a move in the right direction? Do we need all the quarterly reports? Or is this a move where we're getting a little bit less transparency here? I'm just, concerned that, 6 months seems like a long time to know how your companies are going, especially when we're considering moving into AI and everything's going to be moving more quickly here. Now we're not going to find out for 6 months how the companies are doing. I think it might be a little bit too far. What are your thoughts, and could this get approved?
I think it's a terrible idea. And I think it's like you just said, less transparency is bad, right? So sunlight is the best disinfectant, right? That famous quote. You want more. If anything, you need more than quarterly reports. You need to know what's going on at these companies. So, and I guess the rationale was, oh, it's too much work to do. Are you kidding me? Especially in the age of AI, where you can press a button and get your financials run pretty fast, So this again is this new SEC. The new day at the SEC is apparently a day in less transparency, which is not a good thing. Investors need to see more. And think about it. A lot of these stocks, like you were talking about before, how they're trapped in these, they're in their own sectors, right? And they just kind of stay there and they'll trade together. That happens a lot of times until earnings come out. And the earnings date, you'll see this disparity. Over the last few years, I've noticed, I don't have any facts behind it, but stocks tend to move a lot more than they used to. You got, $500 billion market cap stocks moving 15%, which is absurd, never heard of, right? So you're getting this massive move on earnings date because the news is finally coming out, and it's getting not in that sector anymore. So, in other words, we need to see more news on companies. We don't need to see less. So I don't understand where they're going with this one, but again, if they want it, they're going to get it done.
All right, Joe. Let's throw something else into the mix here. Prediction markets. Anything you want. Now, prediction markets have been along for a long time, and I definitely know that. But here's a whole nother regulated, unregulated. Where are we going with prediction markets?
Yeah, it's funny. It's the same players that come in, the same guys who are the HFTs who went to crypto, and now you see the same folks trying to push the prediction markets. It's the next grift. Okay, that's what this thing is. Everybody's always trying to find an arbitrage opportunity, and so they can slice off a few pennies for themselves in their high-speed networks. I see prediction markets as just another way to create another arbitrage so that somebody can get picked off. And it's even worse than just, listen, if you want to go gamble and you got a DraftKings account, or do whatever you want, right? It's your money. You can do whatever you want. If you want to go to a prediction market and you want to bet on the next election, I don't really care, to be honest with you. Do what you want. It's your money. However, I would draw the line when I heard that something they wanted to do was create a prediction market ETF. And there's actually a filing out there. There's a bunch of filings where they're going to create ETFs on prediction markets. In other words, shove them into the stock market. And guess what? Shove them into grandma's 401k eventually. That to me is absolutely absurd. And this new SEC had better stop this one, because if you put a prediction market ETF into a long-term account, what the hell are we doing here, right? This is not capital raising. This is not investing. This is just the opposite. You're putting the casino, really embedding it into the stock market now. So I've got a big problem with that one.
Let's talk about just the ETFs. I mean, there are now more ETFs that happened last year, more ETFs out there than actual single stocks. So ETFs now outnumber it. We know we see these form every day, these double long, double short, single stock, ETFs. The traders love them. They like trading. The traders like these vehicles. Like you have NVDL, which is the double long Nvidia. Like, I mean, I've been trying, and Joe, you may have some to be able to enlighten me here, but I'm like, the whole purpose of a double long ETF, like from my perspective, just, seems like a way just to try to get around margin requirements here. Because if you wanted to buy 10,000 worth of Nvidia, or you want to buy 20,000, you buy 20,000 worth of it. Why do you need a double long other than, just trying to beat out the margin requirements? What is the purpose of these double long? Double short, I get, maybe you can't get a borrow. People don't like shorting stocks. They can't short in Robinhood for the longest time. But double long? What's the purpose of this?
Well, I'll give you one further. They were even trying, there was some applications recently for quadruples or fives, even further. And finally, the SEC woke up and said, hold on a second, this is a little bit, it's going beyond the statute of what the rule says, or whatever the definition was. So, where are you going with this thing? How far do you want to go? And to your point, I think, like you said, these are trading instruments. And unfortunately, some people don't understand that and don't understand how fast they will lose their money. Again, if the market wants it and there's a demand, they're gonna keep feeding these things out there. And these ETF companies are more than happy they copy each other all the time. One does it, it's monkey see, monkey do in the ETF world,
for sure.
Right? And they just keep pumping these things out. It's not going to stop. It's not going to stop. And, there's no rule to stop it. So I don't know. I don't have an answer to this one. All I know is that there's more ETFs than stocks, which is absolutely absurd.
Last thing, you want to add something, Joel?
No, go follow through.
One thing, and this gets a little bit complicated for maybe some of the newer listeners here, but trade through rule. I've commented on this in the past. So we have the SEC talking about removing Rule 611, which is the trade through rule. And just to give you a simplistic example, trade through rule is what is called top of book protection. What that means is the best prices on the lit stock exchange get filled first. So if you're a market order and the price is $65, the trade through rule says your broker has to at least sell to the person who is at $65. You got to get at least $65. They could match the price, but at bare minimum, the seller gets 65. They get the best available price. The trade through rule is the rule that protects brokers from not giving you the best available price here. Now they're talking about this rule isn't necessary. The brokers are going to get you the best possible price anyways. Why not just abolish it? What are your thoughts here?
Another bad idea by the SEC. This is one that they are pushing. I was on a roundtable in September last year at the SEC where there was a whole bunch of industry executives all arguing in their own book, basically. And I was one of the few voices saying, what are you doing? This is stupid. Now, I'm not a fan of Reg NMS. And if you go back to Broken Markets, the book, the biggest thing that we blame for this fragmentation mess of a market, which is fueled by the HFT, was Reg NMS. When that came out, it shattered the market. We have 17 stock exchanges, over 30 ATSs, all kind of stitched together. But there's this rule in the middle called the trade through rule, which at least says, okay, if you post the best bid and you're a retail order, you will get filled before somebody else gets filled at a worse price. It makes common sense. You got to have it there. But the SEC says, well, this is kind of a problem now. And we think there's another motive for why it's a problem, but I'll get to that in a second. But they're saying your best X responsibility will override that 611 and you still have to fill them. And that's true. As a broker, I'm still going to fill the best price. But so then why get rid of the rule? What is the point of trying to get rid of the rule? We think the problem, and a lot of people in the industry are saying this, is that it deals with tokenization. So this whole tokenization theory, which is going on now, if you want to run a tokenized market, it has to interact with the regular equity market. They can't, in other words, because they're Reg NMS and 611, you have to interact with each other. So this would create a huge problem, and it's a stumbling block for tokenization. So what's going on here really is we believe the SEC wants to pull that rule out so that you can start tokenizing assets and trade them over there. And then you're going to have two different markets. You're really going to have an arbitrage disaster. But listen, again, tokenization that's another one of these things that's on the move. That steamroller's going down. If you try to get in front of it, you're going to get run over. They want this thing out there, so it takes some time. But one of the problems is 611. I don't understand it. If you really want to fix the market, what you do is you get rid of some of these things that the exchanges do. They sell proprietary data feeds. They sell your information to all the HFTs, telling them where you are on the book. They tell them, oh, there's a 6 cent bid. It's below the 7 cent bid. He canceled before, and now they've replaced it again. Why is that allowed? Why are they giving up my information so that some other idiot can model it? Not idiot, smart person can model it and take advantage of it. You want to get rid of rebates. They're not necessary. Why are they allowing rebates? And there's a lot more things you can do than get rid of the trade through rule to fix the market.
Joe, I just want to get a broad comment from you because you've been through very different market cycles and market environments, and we have a lot of different things going on, juggling, AI, conflicts, whatever you want to say, interest rates or whatever. But you talk to the institutions, right? That meet, and you expressed how they feel about the overnight markets and stuff. But I know you don't have a crystal ball here, but just what's the institutional feel out there about these markets? I mean, we've been going nowhere for 6 months. Some stocks have had some crazy moves, some down moves. We've had oil, like you ever think oil, the market's holding up here, just like what are the big boys at, sitting on hands, still being aggressive or going to 8,000? I just wanted to get the general mood of the big boys.
Yeah. From our seat, I haven't seen much difference in the sense of trading. We'll trade for all different, we're execution only guys. So we're not trading our own book. We're trading only on behalf of the clients. So we have all different flavors of clients. We've got some long onlys. We've got, hedge funds. We've got pension funds. And from what I can see, they've all pretty much gone about their business, doing what they normally do. They're pairing positions. They're putting on new things here and there. I haven't seen anything really different. There's certainly no panic out there. There's nothing like that. But it's just kind of business as usual. I guess it would be my take from my limited point of view here and what we see in our client data client set. I'm sure if you talk to some of the big hedge funds and some of the bigger Wall Street desks, they might have a different opinion. But from what we can see, it's pretty much business as usual.
Business as usual. Joe Saluzzi, partner and co-founder of Themis Trading, co-author of Broken Markets. Joe, it's been way too long, and we're going to get you back on again soon. I really appreciate your candid comments and your perspectives on the markets.
You bet. Thanks, guys. Thanks for having me on. Have a good day, right?
Thanks, Joe.
We're rallying.
Lots and lots of good feedback for Joe in the chat.
Yeah,
thanks, chat.
it's nice to get a
feedback.
market structure guy on every once in a while, and just talk, get in the weeds, get in the plumbing a little bit here because it matters. And I mean, these rule changes do matter. And yes, the brokers probably are still going to try to route you to the best possible price. So if they do eliminate this, there's still going to be that effort to try to get you the best possible price, best execution. But I mean, why, what is it hurting really? The rule that's in there right now, trade through protection here, because they don't get, fined here if they don't. I mean, it's just, more protection for the individual investor. And I think losing protection is never a good thing. So I'm kind of with Joe on that too.
Okay. Just general market comment here. We got a creeper rally here. Just coming back up, folks. I just got to emphasize, if you're looking at my my charts here on the right, this is the daily chart. Flirting with the 200-day a little bit. We're back above it, but think of all the news, think of all the action that we had on Friday, the big comeback on Monday. We basically got matching highs here. Once again, with just resilient strength here, maybe helping Nvidia. I saw when I sat down on my desk, some of the tech after good days yesterday was red, but that's turned back to the green. I think people are just going back to the well here with the tech stocks. And we all know those are still the biggest part of the markets.
I mean, I go back to the well. On the dip here, I'm only buying, tech and AI names. I've been sticking with hardware and energy, not even just software. So I'm doing the same thing. Maybe it's crowded, maybe these trades are crowded, but the valuations aren't crazy on these names. So, that's, I think, that's still the best place to be. I think going forward, AI is not going away. I think it's, even if we regulate it, I think it's still going to be dominant. I think it is going to replace jobs. I think there's just so many different, areas you could invest in, but I think why not, be still investing into AI? So they go back to the well, and that's what we see happen here too. Now the question, we actually are seeing a little bit of decoupling again here this morning, which is a positive sign for the bulls out there. That USO, even though it's still, it has leaked from the highs, but it's still trading up substantially. S&P's up too. Dogs and cats living in harmony here again here. Is this, the market here where we can rally even with oil prices slightly going higher? I mean, this is where we are this morning. This is what is happening this morning. First day we've seen this in a long time.
Let's get to a couple of other news items. There's been some breaking news during the show. I would just highlight an ACLO release from 8 a.m. Announces U.S. Department of Energy approval for nuclear safety design agreement of Aurora Powerhouse. But a couple news items from earlier. Delta had some guidance this morning. I believe it was from a CNBC interview. And actually, my comp over here just shut down a little bit. If you have the Delta guidance, one of you guys?
I don't, but I don't have it in front of me actually. But I know that they were talking about revenue guidance. So they
I got it.
Raised.
Actually,
you have it? Okay, so give it to us.
Yeah. Actually, no. Sorry, I don't.
I do.
Raised
Raised revenue guidance on accelerated March demand trends. Expect Q1 earnings within initial guidance range. Says well positioned to navigate current market environment.
So a couple things here. One, the airline's top line isn't impacted by oil prices. It's the bottom line that is impacted. So if you look at the guidance carefully, we're raising sales guidance, meaning we still have people traveling here right now. People aren't worried about their job enough to cancel their trips. That's maybe coming next year. I think it is. But at this point in time, we have lots of people still willing to travel. They said the adjusted EPS will be within range. So reaffirm that, we're going to kind of be in the range. So they're not raising their bottom line. They're not going to make more money because oil prices are a lot higher. They know that this is going to impact the bottom line. But within range makes the market a little more comfortable as well, because we've seen oil prices just explode. Obviously, Delta has sold off about 20%, from top to bottom, since the war has started here. So, so we're saying, hey, we may still make as much money and our sales are still going to be pretty good, is a pretty good comment from Delta. Do I think they're going to fall in this range? Do I think oil prices are going to stay escalated? I mean, I would bet that they're guessing that oil prices aren't going to stay as elevated as they are. Because if oil prices stay as elevated as they are for the foreseeable future, then Delta's going to make less money and miss guidance. And we have seen Delta before. I want to say this. I have seen the CEO go on CNBC, say we're doing great, and 3 weeks later lower guide.
Yep.
So the Delta CEO is notorious for being too optimistic. So I would take this with a grain of salt.
Good warning.
Yes, it's a nice pop for Delta here this morning, but I bet they are saying, well, oil prices are going to be elevated, for this long. So we'll be within range on the EPS. We'll hit that. Yeah, if oil prices stay up, they're screwed.
And also what they're doing that increase the revenue is they're starting the free drink service and chips and stuff a little bit later. So they're like, oh well, there's turbulence. We're not going to be able to get the. I'm like, well, where's there no turbulence, man?
That's all the time.
Give me my Diet Coke. And
there literally is a little rumble, and they're like, no service.
Yeah,
on
the
this
little
here.
what do they call those
we
things?
Can't do the service cart. Save all your pops and everything. We got to cut those expenses because oil prices are higher right now. I felt a little bit of wind. The plane just shifted a little bit. Too much turbulence. I think you're exactly right, Joe. They hate doing the service.
Yeah. So when they come and they give you the basket and they give you the what are the salsa sun chips?
the sun chips. Yeah.
Yeah, man. You're like, Lisa's like, I'm like, sun chip cookies. I'm like, and I'm grabbing. She goes, just grab one. I'm like,
no.
I don't know if they're coming back. But Delta's soaring here up to $64. I actually talked about this yesterday, and we looked at this, and I'm like, well, if there's a dip to buy out there, 76 to 56 in less than a month, maybe some kind of relief. Now, the higher oil is kind of throwing a monkey wrench in this, but I think a really important comment Dennis said, and I don't know if this was last year, the year before, guidance, and then it might have been less than, we will have to ask ChatGPT. It might have even been less than 3 weeks later. And like, what?
It was really close. They were doing fine. And then they lowered guidance. Went on CBC, said, oh, we're killing it. And then 3 weeks later, they lowered guidance.
Gap fill here at 64. Just if you were waiting if they fill the gap, you're going to get a chance. And then the bar of interest today, I like my bars of interest. You had a range of 65.90 to 63.72, closed at 63.83. So let's see if some short-term traders that bought the dip are going to take some profits in DAL.
Let's go to our next news item here. Nebius this morning announcing a $3.75 billion convertible senior notes offering. A couple of things here. Joel, when we read this news item, you were like, oh, that's smart. I want you to explain that. And then also, I want to go into deliberately what a convertible notes offering is and why it can move stocks. So, Joel, you comment first on why you were like, oh, that's smart.
To go into the details. The reason I say it's smart is, that they nice appreciation in their stock price, right? And they need money to produce and produce the goods. The other thing I like about it is convertible senior notes. So I'll probably be able to get some of that offering,
Dun, 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 dun. He'll be here all week, folks. Yeah, get that senior
no,
notes.
Dennis is like, no, he didn't even move. But I like it. Let's see. It's a convertible offering. Dennis, you can go into the details on that. But I just think it's good moves by the management.
Well, I mean, this is what they do. They get the big stock pop, and then this is when you've got to get some more money to, obviously, for production purposes, as you've said here, Joel. you're going to sell it on the stock days that those stocks ripped higher. We just watched Nebius go from $95 to $130. So perfect timing by management. A convertible note is simply, that they've got, a bond feature to it, and then obviously can convert to equity, which makes it dilutive, which is why the stock is trading down. When you get a straight up, just bond offering, the stocks don't trade down on them because they're not dilutive. What dilutive means is you're going to own less shares. If those bond holders convert to, and they have a conversion price, and they convert actually common stock, then everybody owns a little bit less of the company. So that's why the stock is trading down. I love Nebius. I think they're doing everything right. Would I buy this dip on this? Maybe. Like, I liked it back at 95, 100, 105, sure. I feel like we're a little bit overdone when we got to 130 here yesterday. So I'd love it to come back in a range, like 110 would be good. Love the company. I think they're doing everything right. They're getting more contracts. Obviously, Microsoft was the first big one. Now Meta. I mean, they're doing a lot of things right. This company is firing on all cylinders. I even like the offering. I think the timing of it was perfect.
Let's keep going here. We're probably not going to be able to get to ratings here today, folks, because we want to go over one more news item. Honeywell commenting this morning. I believe it was this morning, not late last night. Oh my gosh, late last night. That's hard to say. Honeywell said they expect a hit in their first quarter from the Middle East conflict, although they are reaffirming maintaining their previous guidance. If they are maintaining guidance, why do we think this is important and notable enough to mention on pre-market prep here this morning?
Just the first company that's really said, hey, the war is impacting us to a certain extent here, and it could be an issue, even though it doesn't sound like it's going to be a major issue for Honeywell. But, unlike Delta, we like, the forward looking here, being fully transparent and saying, this is not good for us. Delta CEO completely opposite, like, oh no, we're oil prices come back down. That's what they're saying, internally, I'm sure. So I love the transparency here from Honeywell. The stock is obviously trading down because they did have a little bit of a warning here that the war continues here. It's going to be an issue for Honeywell, but not nearly as big of an issue for Delta. So that sales guidance raise for Delta, I'm still just shaking my head at. Sure, sales guidance up, but just saying, oh, we'll hit the numbers, no problems at all. I don't believe it for a second.
Before I do the technicals, where does Honeywell fit in the old AI spectrum?
Good question, Joel.
Well, Honeywell's in the mix for sure. There's a lot going on there, with Honeywell. Like, I think this is one of those sneaky ones. Like, even think back to like a Carrier. Like you could say Carrier is not, but there's cooling systems. There's other things. Honeywell does a lot of things that are necessary. In the data center play, I think Honeywell's got a big part of it. So I'm not saying it's a pure play. Obviously, Honeywell is going to be, linked to home builders, linked to a lot of other things as well. But I think there's Honeywell's that got some AI, component to it for sure.
Easy technicals for this one. There's a low from, I believe from last week, right here, 231, right here, right now. Had to gap up. That was probably from earnings. Failed to make a new high here. It's just tough terrain here. You did take it out in the pre-market, but I thought you just got to be aware of these kind of patterns, folks. I mean, what did it take? Almost 2 months, 2.5 months to get to this area. Another month to get to here. Sometimes they come down real quickly. So they did it in the pre-market.
Honeywell benefited too from this movement in January and February into value stocks. Like, that was a big move. Like, if you look at Honeywell, we were comparing obviously to some tech stocks that are 25, 30, 35 times earnings, in some cases 100 times earnings on some of the growthy ones. Some of them don't have any earnings at all. Honeywell's always traded with a little bit lower PE, was in the teens, is up to 22 times forward earnings because the stock has went up substantially in the last little while. So it has moved up. That's what we were saying. Some of these value stocks are no longer that value-y. They've kind of, we've had a little bit of a bubble in value stocks over the course of the last couple of months before the war, brought everything down.
And you had one heck of a steep trend line that broke. I mean, I wish we would have found this sooner, but it just walked that puppy up and held, and then actually put it in kind of a little bit after the fact here. But important levels. See what the bulls can do at 231 in Honeywell. We're ripping again.
Ripping again. We're going to switch over to SCN here, folks, but I want to give both of you guys a real quick opportunity. Any final thoughts as we're a half hour ahead of the opening for intraday trade?
Great day for the bulls. Great day yesterday for the bulls. Great follow through here. We get oil trading up. It's leaking here now, but and S&Ps and the world markets really shrugging it off to a certain extent here. So higher oil prices, even if they're just going slightly higher, now doesn't necessarily equal lower stock prices here. So, which is a fantastic news for the market. I do believe, I said this on STN yesterday, I do believe there's a path here for the stock market to hit all-time highs again. We've been trading it from the short side. We've been doing a lot of trading here. But I think with AI efficiency, which we're going to see here in the short term, I think longer term, I think the markets are a big question mark here. But I think shorter term, I kind of agree with Trini. I kind of, it's my own thought process here as well, that, we're seeing, XYZ, less labor costs. Meta's going to have less labor costs. You're going to see more AI efficiency via less, labor costs on a lot of companies going forward. That is going to be applauded. We saw with the pop with XYZ. We saw the pop with Meta. We're going to start to see that with other companies here as well. And I think that has the potential to bring us up to challenge all-time highs here again. Late second half, like later this year, I think jobs are going to be a major issue. And I think that's where the market could start to sell off. So I love this Citrini playbook where they kind of laid this out. I think, right now there's this window for the bulls here, though. And I think it could be a good one.
All right. I mentioned Friday, Monday highs. We're 13 handles away from that. Shrugging. Well, oil has come in a little bit. There was news that a high-ranking commander in the Iranian army was taken out. So maybe that's given a little bit of relief to the market. Climbing the wall of worry here. So let's see if we can get to that double top I mentioned. If you're an IPO person, you absolutely have to listen to tomorrow's show. We have been talking to Eric Kroll, author of IPO book. And this guy's been incredible. And I've been talking to him. I've actually been talking to him recently about the IPO from Robinhood, which is for private markets, for public people. So if you know anybody, if you're into the IPO market, get them to come to PreMarket Prep tomorrow for more good information. Thanks for joining us, folks. Back to you tomorrow morning.